What's up, traders? This is Andrew O'Connell with Pristine Capital, coming at you with yet another market recap video. What a nice quiet day today, right? Like, nothing going on in the markets. Like, it was just great. I'm kidding. Today was an insane day in the markets, team. We're going to talk about everything that happened today. We're going to go through the sell-off in which every asset got completely sparked. So if you drew down your account today in today's market, join the club. Pretty much everyone else in the market did as well. So everyone's going through the same exact thing. But what it's all about is how you're adapting and the next steps that you're taking. And also, like, how you deal with that emotionally. If you're like, if you're like crying into your pillow or like screaming into your pillow, that means you either have too much risk on or, something of that nature. Usually it's like too much risk or whatever. But yeah, these kinds of like tremors that happen in the market, they happen all the time. They're going to continue to happen, in markets. So we're going to talk about everything. Before we do that, quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump into it, team. Let's talk about this crazy market day. Okay, so box scores for today. Look at this, team. So S&P 500, as measured by the SPY, closed down 1.97%. Nasdaq QQQ got sparked, down 2.83%. So real quick aside, if you are not heavily concentrated in the high growth, high valuation names, give yourself a pat on the back, I must say, because there's a lot of players out there that they run these really concentrated portfolios, and whichever names are working, they allocate to those names and they stick with them even when there are signs that, that group of stocks is coming out of favor. So if you were in like, some of these other like more defensive exposures and you got sparked, there's, in my opinion, there's no shame in that, because like there's people out there, team, that today lost big time. If you're a big time like FANG investor, you had a really rough go of it today. IWM down 2.25%, Dow Jones down 1.63%. So even the IWM, which I've been very bullish on, I'm heavily allocated to, that's my largest position, even this did not escape the sell-off today. Even the Dow Jones, which I'm also allocated to, did not escape the sell-off today, which is okay. The entire market sold off. You can see the breadth was also, really poor. S&P 500 had only 11% advancers, Q's 5% advancers. The small caps had the best breadth at 13%. So this was a real washout day. And then take a look at this heat map. Heat map really shows you exactly what happened. Everything got scorched. So yeah, there's a couple of ways of looking at it. Like, you can either be like, oh my gosh, like, today was the worst day of my life. Or, these kinds of events, like, they do happen. They happen not all the time. They're very rare, but, these do happen. So it's like, if you made it through today, you're all good. Like, it is what it is. Like, look at this. Microsoft's down 3.76%. Apple down 2.33%. Google is down 3.71%. Look at NVIDIA. That's been a market darling for quite a while. It was down 4.4%. See a lot of weakness. Look at some of the areas that were a little bit stronger though. Energy. We have that global energy shortage that's occurring. And then look over here, team. Look at these financials. JP Morgan was only down 0.5%. Bank of America only down 0.28%. So that's something I'm paying close attention to. All right, let's look at the actual indices and we'll take a look at what happened. Okay, so indices, let's check them out. And it is past 6 o'clock, so we can see the opening up of futures. So S&P 500, take a look at what's going on. So we have this downward trend channel that we drew on, basically right at the beginning of this sequence. I was pretty conservative on the market and got really negative pretty close to this topping action here. And I started getting more involved in the markets, I believe, on this candle over here. So yeah, let's take a look. We had this big cascade lower about a week ago. And then after the Fed meeting, some nice green price action. We made it back up to this 50-day simple moving average. and it looked like, hey, things are going well. But then we had, with the Fed meeting, basically this change in the market psychology. Because the Fed meeting, they established, we're going to be moving forward with the Fed taper, and the rate hikes, we're actually going to be moving those forward in time. Now they're saying that the first rate hikes should occur at the end of 2022, which is about a year from now. So now we have the market trying to reshuffle. We talked about this earlier in our pre-market webinar, our afternoon webinar, but the market's trying to reshuffle into assets that perform better when the Fed's being a little bit tighter on their monetary policy, and out of those assets that do really well when there's really loose monetary policy and the money printing is just, flowing. So we had this big cascade lower, some nice strength. And then as the yield curve, the 10-year treasury started to move higher, then it just became like, today was like the big circuit breaker day where it was just like, market couldn't handle this move in the 10-year treasury. So you can see this, these are our 10-year treasury futures. And you'll see the futures, they've been getting smoked the past couple days. So the Nasdaq, that's why the Nasdaq's really getting smoked. But at a certain point, this 10-year treasury yield is used as a discount rate for the cash flows on pretty much every investment opportunity out there. So when the 10-year treasury yield starts moving up, a reasonable percentage, then suddenly every group of assets has to re-rate. So it's kind of what we're seeing, investors, they're all like, I need to get out of here. I need to get out of the Nasdaq. And then, it's just kind of chaotic. So it happens. So going back to our ES, you'll see this is our second leg down. So we got up to that 50-day moving average. And then today we really cascaded lower once again. And now we're trading below this monthly value area. But keep in mind that we are pretty much at the very end of September. It's say September 28th. Trading day is already over. We're about to be in October, and we're going to have this new monthly value area. And basically, we found support right at the bottom of this new monthly value area. Also, this is an H pattern. Talked about this a bit earlier, but these H patterns can be so devious, team. This is the most devious pattern out there. I'm going to share why with you. So a lot of times, there's players out there buy the dip, 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 and then sell everything down here. And then, the market starts to turn. Everyone wants to make their money back that they lost on this, leg lower. So everyone, they start buying again. They're like, oh yes, the market bottomed. This is so awesome. I'm so relieved. And then when we get sparked the second time, that's when players, they lose their mind. I'm seeing people on Twitter losing their minds today. It's pretty obvious. They get super fearful. They go, oh my gosh, I was so wrong. The market didn't bottom. I'm an idiot. I need to get to safety because, this is too much for me to handle. And what happens, it doesn't have to happen this time, certainly. But what I've noticed with these H patterns is look at what happened today. We actually made a higher low than what we did on the 20th. A lot of times the H pattern comes, you get that second flush, and then the market, just moves on to bigger and better things. So I'll show you a few examples. Went through this earlier. I'm gonna take a look at, this is a classic H pattern right here, where we had the leg lower, then we had the bounce, then we had the second flush. And that second flush is really what gets everyone. And then we just moved on to bigger and better things. Same thing, here, this was a really devious one where this was actually, I wouldn't even really call this the H. I think back here, this was in March. I think this one did get me where we had, oh my gosh, this is a 10-day pullback. We got sparked. We start rallying back, and then we get the second leg lower. This one actually undercut the prior low. And this one looked super scary. This one really got a lot of people, I'm sure. And then the market just bottomed and it moved on to bigger and better things. There's a lot of examples of that. So as I see this play out, maybe this is the end of the world like everyone thinks. I'm inclined to think that it's not. I think this is, this whole mishap that occurred today, it's due to some rotation, investors going to different groups. Investors were way too concentrated in the Nasdaq, and everyone was trying to hit the exit at the same time. This is a really good illustration of that. check this out. So this is basically like everyone in the Nasdaq, and everyone's trying to sell at the same time. There's really no buyers because everyone's come to that realization that, you know, in a rising rate environment, the Nasdaq is not the place to be. So this is the exact dynamic that we're seeing here. Shout out to, sorry if I'm mispronouncing your name, shout out to Yaroslav. I've been interacting with him a lot on Twitter, and he actually shared that with me. I thought it was pretty cool. So yeah, that's sort of what I'm seeing, where, you know, we'll see how tomorrow goes. But right now we have the VIX is at a 23.25, so the VIX is really elevated. The VIX also put in a long upper wick. And then we have the VVIX, which is, yeah, the VVIX very elevated also, but also put in a long upper wick. Let's take a look at the Nasdaq. Yeah, Nasdaq is up 0.09% in the after hours. This one, yeah, this one looks like it's more in trouble because I really think like the move is rotation out of the Nasdaq. But even this, you know, very similar, putting in that H pattern. And what's interesting here is take a look at this value area, the monthly value area. As we move to October, you know, we're going to be nowhere near that monthly value area. So I think the Nasdaq, like, I really don't want to be in this group of stocks at the moment. So yeah, we'll see what happens there. And then the small caps, this is where I'm heavily allocated. Small caps, you know, today was a pretty devastating day for the small caps as well. They were down 2.25%. But for the small caps, what I like is this, you know, on this next leg lower, we're nowhere near the prior low that we made a week ago. So I really like that. That's some nice relative strength. And we found support right at this monthly point of control. I like that as well. And this 50-day moving average. So let's say tomorrow, maybe we get a bounce, maybe we get some relief. Not saying we have to. It's just, you know, a lot of times when you do get these flushes, you get a nice relief move. You know, we could find ourselves above the 20-day moving average, you know, as soon as tomorrow. So that's another reason why, like, today for me personally, like, I hate, you know, taking drawdowns or like being invested in the market when the market, you know, declines. Like, I actually stepped off the desk. I was like, let me go for a workout, because one of the worst things psychologically for me is when the market's doing this and I'm staring at price like all day. I was like, let me go to the gym and, you know, just jump off the desk for a little bit. Sure enough, I came back, you know, over an hour later, and the market was like in the same exact spot that it was when I left. But yeah, the small caps look really good on a relative basis. And then the Dow Jones, the dogs of the Dow, they're not dogs anymore. No, they still kind of are. And the dogs of the Dow look better than the Nasdaq for sure. Not quite as good as the small caps. So what you'll see is that once we get into October, the Dow Jones is going to be trading inside of value. So that's much better than what the Nasdaq is doing. So yeah, I think the trend in the Dow Jones is definitely improving as well. So those are our headline indices. And then let's take a look at our sectors and style factors to, you know, see what's really showing strength. So energy was actually positive today, up 0.34%. These sectors, they're ranked in terms of momentum. And then we have the regional banks, which are only down 0.75%. The banks, I think, are an awesome place to be when we're in a Fed tapering environment, when we're in a rising rate environment. And you can see a nice relative strength, barely down. And then the cannabis names, you know, they got sparked today as well, but they're in our third momentum slot. Take a look at some of the carnage that's happening here. So we had, let's take a look at some of the big losers. ARK Innovation Fund down 4.18%. This one, like, poster child for a lot of those high growth, high valuation names. ARK W. Software stocks down 3.63%. That makes a lot of sense. The Innovative Tech Fund down 4.21%. ARK Genomics. So yeah, a lot of the more speculative names that have been doing very well because they're awesome companies, but they just don't do so well in the rising rate environment. And then style factors, we had high beta down 2.29%. International momentum was down 2.48%. And look at this, growth was down 2.84%. So yeah, growth stocks really getting hit. So if you look at your portfolio and you're, you know, 100% in growth stocks, you know, that's something to maybe consider. Like, hey, you know, let me look at some other areas in the market that are showing a little bit more relative strength, and maybe let me reallocate some of those. Because remember, even when the market's selling off, even when it's not, a lot of investors do this where, say if they, have a loss in their portfolio, let's say they're long this growth ETF, IWF. They got sparked today. It's down 2.84%. And let's say they bought it yesterday. So they're down 2.84%. They go, oh, I bought it 2.84% higher. I can't sell it now. Now I have to wait until it comes back and then I can sell it. That's so not true. That's just a psychological, behavioral fallacy. Because even though you may not have realized that loss, like your account balance already reflects that loss. So what's the big deal if you just take the money that's in that asset and move it into a different asset? There's a lot of investors that can't do that because they don't want to accept that they made a mistake or that they were wrong on something. But it's always very important that at any given moment, you're in the best assets that you can be in at that moment. And you're reassessing that regularly. Am I in the best assets, or am I in some assets just because I'm stuck in them and I'm being stubborn? Because what you'll find is, if rates continue to rise, which I think is definitely a possibility into 2022, you're going to look back and be like, man, I wish I sold that growth ETF, back when it first started declining. Like that can happen to you. So that's definitely something to be cognizant of. And then, let's take a look. So I'll go through my trades first, and then we'll talk about, just some closing things on like where the market is, all that good stuff. Let's see. And what do we have here? So I closed out of this MDB call spread. This one I threw on, a couple days ago when these growth names still looked really strong. And this one, I put on like a deep out of the money call spread. This name MDB was one of the ones that got sparked. So I was like, you know what? I have 40 cents left in this call spread. I want to take that money and reallocate it to a new trade because I think there's a really high probability that this one is going to turn into a zero. So I took that 40 cents. And MDB, this one really just got caught up in that growth sell-off. So this one just kept falling throughout the day. Finished down 4.03%, and it's in that group that's just not doing well. So why, it's one of those things where it's like, why kid yourself? Just take, if you can pull some cash out of it, pull it out. That way you have that cash to reallocate somewhere else. And then I added this stock ONDS. I added some common shares for $9.75. And ONDS looks great. This name, look at this. So I'll pull up this news thing that's in our Discord. So check it out. So ONDS hosted a virtual presentation focused on American robotics. Ondas demonstrated how the AR was ready with automated AI-powered drones, technically advanced marketplace platform, unique FAA approvals to drive growth in the drone market, implying a barely penetrated market opportunity worth $100 billion. And it just breaks down, what's included in that opportunity. And basically this company, they're ready to go. Everyone was not sure if they were actually going to make revenue. And it looks like they're going to be making some nice revenue and cash flow. And the market's view on this stock, clearly changed. So ONDS, look at that high volume that's coming into the stock. Market participants really liked what they saw in that presentation. This is the highest volume day since back in June. And you can see we're breaking out of this monthly value area. So what it looks like to me is some investors, they were buying ahead of the event. Because you can see, this stock moving higher. It's above those key moving averages. And then this event really was the catalyst. Now we're above that 200-day simple moving average as well. Keep in mind, this occurred when the market was very, very weak. So I really like this name, ONDS. Those are my trades for today. So let's go through real quick. We're not going to go through options order flow today because I want to look at something else just to put the market in context. So I know everyone today is getting super freaked out. And the reason why I'm not as freaked out as they are is because, if we look at our current CBOE, So look at this. This is the intraday put to call ratio. Puts, investors buy those and they think the market's going to go down. Calls, vice versa. And this is what I call panic put buying, where people go, oh my God, the market is going down. I need to buy some puts. And they typically buy them at the worst possible time when the VIX is super elevated. And this put to call ratio, anytime it's above a 0.9, that to me is saying investors are more fearful. This got all the way up to a 1.15. It was above a 1 the entire day. So do I want to be buying puts, on the same day that everyone else is lining up to buy puts and they're going to be super expensive? No, I don't. So yeah, that's why I think everyone panicked today. So we'll see what happens during tomorrow's session. But yeah, I like when I see people panic. If they were not panicked, then I probably would be panicking. And then also, just for some context, the CNN Fear and Greed Index. CNN Fear and Greed Index, it's at a 28. So we're almost at extreme fear. So yeah, market participants definitely fearful. The other thing as well is our seasonality. So seasonality, I love using it as a guide, really just like, for formulating reasonable market expectations. So I mark this off. You are here. We're right at the very end of September. September is historically a very tough month in the market. In our September, this has been a really tough month. So September is living up to its name. Next year, mark my words, team, I'm taking a vacation. Don't let me not do this. I'm taking a vacation in mid-February into March. And then I'm also taking a second vacation in mid-September. And I think if you do that and you stop trading in both of those months, I think you're just going to have a legendary year. So that's the game plan for next year. But yeah, so we're exiting that poor seasonality. We've been through a hellish market for the past, 2-3 weeks. It's been a good 20 trading days where the market's just really not been doing that well. So I think the answer is on day 20 of this market, not meltdown, but this market malaise. Is that where you want to be getting defensive on day 20 of it? For me personally, no. Because maybe we get, some choppiness in the beginning of October. Maybe even we leg slightly lower in the beginning of October. But look at this seasonality as you get to year end. The seasonality just becomes fantastic. So yeah, I think for everyone that's getting bearish now, that's where have you been, man? Look at this. Yes, this is, let's count this out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Yeah, 17 days into this down sequence. Now we're getting bearish. So I don't know. That's just my perspective. Everyone has a different perspective, but yeah, those are my thoughts. So we have the seasonality improving, and that about does it for this market recap video, team. So yeah, long story short, the market environment is changing. We're going to be in a monetary tightening environment, assuming the Fed doesn't buckle and just change their mind. There's likely going to be some new groups that lead the market. So some of those other groups are not really going to do as well. And I think the important thing heading into tomorrow is to just keep your composure. Look at your portfolio. I'm going to be doing the same thing. I'm actually going to be rebalancing our Pristine Capital Trend portfolio with some names that I really want to slot in there. So I'm going to be doing that rebalance. Yeah, take a look at what you own and say, am I in the most optimal assets? That being said, hope everyone has an awesome night. I'll see you all tomorrow.